Hello and welcome to this special Diwali program. It's that time of the year, it's festive, it's bright, it's all colors, and of course it's a period of anticipation as well. Anticipation for better things as compared to what has just gone by. At the outset, I want to wish all our viewers a very happy Diwali from the entire CNBC-TV18 team. We are coming to you live, by the way. You can see the decoration around from the Motilal Oswal Towers here in the heart of Mumbai. The next year, Samvat 2018, is expected to be dominated by two things, rates and politics, Powell and politics, as some have put it. And who better to then put some of these questions to in terms of how this will impact your portfolios, these big, broad themes will impact your portfolio to two real heavyweights. How to pack a punch into your portfolio, that's the question we're going to focus on and answer in various ways here over the next 20-30 minutes or so. So let me welcome in our esteemed panel. Raamdeo Agrawal needs no introduction. Raamdeo ji, of course, is chairman of Motilal Oswal Financial Services. Manish Chokhani needs no introduction as well. He's, of course, director at Enam Holdings. Happy Diwali to both of you,
Happy Diwali.
to your
Happy
families,
Diwali
to your teams.
And the entire TV18 team and all the investors.
Thank you very much. Let's just start there at the slightly top level, 30,000 feet. Are these going to be the big talking points as we enter the new Samvat, which is interest rates, and the question whether interest rates globally have peaked and we are entering a cutting cycle now, and politics, because there are state elections and, of course, the big general elections next year. I just want to start with that. Raamdeo ji.
Yeah. So interest rate cycle has peaked out. I think it's a too big a statement to say. I mean, yes, there looks to be some kind of a pause right now. But to say that it has been picked up, I have no view on this interest rate cycle. But one thing is for sure that what we have seen last 10-15 years of sub-zero or zero kind of a thing where 12, 15, 13 trillion dollars of bonds, particularly in Europe, went below zero. So that era is over. You know, what started in 80s from 15-16% 10 year to zero, I think that one phase in pendulum is done. And now, as Howard Marks says, you know, pendulum moves all the way up. So from zero we have come to 5.5%. Whatever happens, I don't know, but it is definitely not going to go back to zero immediately.
And this is the extreme, the other end of the pendulum, 5.
I don't know.
It can swing more.
You don't know. I mean, that's what I'm saying. When you said that we have peaked out, I don't know.
Okay.
So what I'm saying is that for sure, even 5% is not what the world is designed for. You know, world is designed for 1 or 2% types.
Yeah.
So I think it is an era of little more expensive money, little tighter money, and it will have its own repercussion. Like what we are seeing, that FIs are continuously selling because they are finding far more attractive opportunity in the debt side out there. I would think that high multiple companies will come down here also.
Okay. Manish, two questions. One is, there has been no price to be paid so far. You've not had a price to pay, right? I mean, last cycle we had a big price to pay in 2008 because we had 450 basis points of tightening. This cycle we had about that much, 475 basis points from where we started to now. I'm talking about the Fed rates. Markets are okay, I mean, right? I mean, by and large. So that is one. Second, if, as Raamdeo ji also said, we don't know if rates are at a peak and they start to come down, will that unleash a gush of liquidity into equities, into markets like India? Go on.
So let's separate the two out. So first, fundamentally, what you're saying is right, that the rate cycle is not yet peaked. And in fact, Jamie Dimon is on record to say he expects it to go to 7%.
7%.
The fact is, this time the pain has been taken by the central bank because they've subsidized all these fellows where the rate increases have not affected them. Because people have booked their mortgages and passed on the pain to the effectively the National Housing Board in the US. And the central banks actually are technically all bankrupt. And while they are trying to tighten, the fiscal side is as loose as ever. So the US government is printing money like no tomorrow. They have an interest burden now, which is $1 trillion a year, which is 4-5% of GDP for a country whose collection is 9. And this is the best economy in the world. So how Japan has been bankrupt for the last 30 years and slowly decaying, the same thing has happened to UK, the same thing has happened to Europe, it's happening to US. So I call this the Japanification of the developed world.
But they don't have the US dollar. None of the other countries have the dollar.
You know,
So just-
we call it the pirate plank. When you walk off the ship on the plank, until that Minsky moment comes, and then you suddenly splash into the water, you feel things are fine. So I think that moment is going to come, and there will be massive disruption, in my mind, in the currency markets, which will be sparked by a bond market event.
In this
in the
year,
developed
in our
world.
lifetimes, in near term, long term?
I think it's closer than it ever was.
Achha,
And the, how do you call, the canary in the coal mine to me is United Kingdom, which has gotten out of Brexit.
Right.
That currency has no business to be whatever 100 to the rupee. And you see, even when Tata goes with a $300-400 million investment, the Prime Minister is standing in attendance. So it's telling you there's difficulty there. The way the Japanese yen has collapsed is telling you there's trouble coming. The good news is you are the only large economy in the world.
By the way,
India.
it doesn't have to come if rates have peaked and we start at some point, rates start to go down, right? It doesn't have to happen.
So, well, that was one reason why people were selling banks in India as well. Because if you think rates are going up and I'm going to lose on bonds, so they were selling financials globally and they just followed that trade over here. And each time my friends from abroad say India is expensive, I say, let me show you a menu of my biggest sector is banking, which is 30% of the index. You can start with a 5p for Canara Bank, 6p for Bank of Baroda, 7p for PNB, 8p for SBI, which is my largest bank. 11p I can give you Axis Bank and IndusInd Bank. And my best banks are HDFC and ICICI, which are on less than 15. So if you think this market is expensive and these guys are all compounding at 18-20%, there's something wrong with you. Post the general election, and assuming things are all steady,
That's what I'm going to get into
if we
politics.
don't get 100 billion a year, I would be very, very surprised.
Okay.
And I do think in this decade, we will be the bubble market
Okay.
of the world.
100 billion per year.
Per
in
year,
FI.
will no.
FDI.
I said FII
FI
plus
plus
debt plus FDI. Cumulative inflow. So your balance of payment problems and the rupee depreciation is gone.
Okay.
You are the momentum market going forward in this decade. The way the world flipped on Japan with one trade of Buffett, because everyone's acting like lemming. There is a single trade, single dimensional investing going on. I think we are setting ourselves up for that.
Okay.
It's still away. I mean, let's get the May election out of the way and
You
then
know,
we see.
Quickly, I want to get this election business out of the way. Is continuity in the price, Raamdeo ji? I mean, everybody is expecting mostly that there will be continuity, right? And is that a risk in your opinion? And how much?
There is always 0.01%. You know, somebody said if Modi doesn't come, then market will fall by 25%.
I
Okay.
think it was Chris Wood
No,
or...
just you know who said. What I'm saying is that probability is 1%. What happens if he comes? That is 99%. So then market goes up by 25%. So you are losing how much? 24.5%. So the payoff matrix is more like 25% up rather than 25% down. So you know there are a lot of ways of the mind is very difficult to figure out the probabilities of the events. You know, so the probability of the continuity going away is very low.
Yeah.
At least the way things look right now. So I think, but then event is event. Let the event be over. On 7th December, one event will be over. And then I think the rally could start immediately after 7th December election. Because
Depending
then,
on the outcome or irrespective? Or
Irrespective.
Irrespective.
I mean, if it is very bad outcome, then market may correct a little bit and then the rally will start.
You think we will have a rally into general elections?
Yes. Because this is what happened in October 2014.
Okay.
I mean, the moment in Goa, Mr. Modi was nominated as the Prime Minister candidate, I think the market actually rallied before the election. After that,
It
wind
started
it.
in October 2014 to 13.
13, yeah.
The
October 13 to 14.
Yeah.
So that is the kind of a timeline we have this time.
Okay.
I don't know what the market does, but my sense is that depending on the result and the mood, we could rally.
Manish, do you agree?
Locals are long, the foreigners are short, and that's how it's comprising the market. So clearly the locals have voted that we think there's a great outcome ahead of us. And if there is something unexpected, then
But do
obviously
you think FIs
you have
are,
to, you
FIs
have to
are more
realize.
circumspect? I mean,
FIs are circumspect. FI money has been still going out. Even last month we lost $2 billion there. We are matched by local flows. FDI still, despite the...
and do you think it's connected directly to
look, if you don't get the same government or you get it in a different combination, the market has to pause and reassess and reprice. So it's not like the world doesn't end.
the local macro story is solid, right? Because that is the bigger thing, and then there are businesses you got to pick. That remains, to your mind, solid, irrespective of
It is
elections.
becoming solider, I would say, by the day.
Of course.
I mean, as the trickle down happens post COVID recovery, started K-shaped recovery. The big guys did very well. I mean, big houses are selling, small houses are not selling, big cars are selling, motorcycles are not selling. But I think this season we'll get to know in December numbers. I think there is a recovery at the bottom of the pyramid, and government has again extended the free food for next 5 years. So I think the pain in the bottom of the pyramid is real. I was talking to a few FMCG companies. They are saying the pain is real and volume recovery is very slow. So clearly the real boom will come when the bottom of the pyramid starts
The mass
consuming,
starts to pick up
the
in a big
mass,
way as
the
well.
last, the 60-70% of the population, when they start feeling comfortable, maybe the inflation is hurting them. You know, so somewhere there is something
But you're
missing.
starting to sense that is happening, or
Yeah, so somewhat it is better than what it was 6 months back, but it's not still what you're seeing on the upper end. You're not seeing on the lower end.
lower end. Manish?
No, I agree with him that so-called K-shaped recovery is probably a reality, and that's why the nervousness on elections. That if they lose and then you start having what they call giveaways, that's also the fear which has been impacting the banking sector, for example. That then your rate cycle, inflation are all pushed out to that extent. Having said all that, look, elections are an event which will get out of the way, and the market will rally post that once it digests. So you may fall 10%, 5%, whatever, if things don't work out. But like he said, if events are working out as expected, it'll get you to a point where again it will look expensive.
Correct.
From where it will get super expensive.
We have to take a break, but before I take a break, tell me 3 or 4 themes, and we'll take a break, come back, and we'll discuss those themes. So the 3 themes, Raamdeo ji, which you're very bullish
So
on.
I think the decadal or multi-decadal trend is fossil to non-fossil.
Okay.
Okay, then you have the IC to EV.
Okay.
Then you have the super cycle of your real estate.
Right. Financialization has been
Then
something
financialization of the savings. You know,
Okay.
I think for us closer home,
Okay.
financialization of saving will have a huge effect on the economy also.
Got it. So we'll discuss this. Manish?
I would, you wake me up morning, night, I will say whether it's household sector, capex sector, infrastructure sector, the intersection is all financial.
I have to take a quick break, so let's do that. Take a quick commercial break here. We are back with you in just a bit with both Raamdeo ji and Manish Chokhani in a bit.